Welcome back, everyone, to the Deep Dive. This time, we're going to be taking a look at CityMall, a grocery-focused social e-commerce platform that's been making a name for itself in India.
Really interesting company.
Yeah, you sent in quite a few articles about them, actually, and they've been making headlines with some pretty significant financial moves, so we're going to dive in and try to make sense of it all.
CityMall's got a really fascinating approach. They're focusing on India's tier 2 and 3 cities. These are the places where, traditional e-commerce hasn't really taken off in the same way as in the bigger cities. And their secret weapon, if you will, is this network of community resellers. Basically, people embedded in these local communities, and they act as a bridge between City Mall and its customers.
Okay, so it's not just about like clicking add to cart on a website. There's a real human element to it.
Yeah, exactly. It's
Yeah.
all about that personal touch.
But they also just secured a pretty significant chunk of debt financing to the tune of about 6.3 million US dollars. That's a pretty big deal, especially since they haven't raised any external capital for 3 years. What's the story there?
Yeah, you've hit on a really crucial point here. Debt financing can be a really powerful tool for growth, especially when a company wants to avoid diluting its equity, right? And this move suggests that City Mall is pretty confident in their ability to generate enough cash flow to handle those loan repayments. Now, the details of the deal itself are interesting. They issued these things called non-convertible debentures, or NCDs, to Trifecta Venture Debt Fund and Alteria Capital Fund.
Hold on, back up for a second. NCDs, for those of us who don't speak fluent finance, what exactly does that mean?
Right, it's easy to get lost in the jargon, I know. Basically, think of an NCD as kind of like a loan that City Mall has to repay with interest. But unlike taking on equity, it allows them to keep full control of their company. So it's a way for them to get the capital they need without giving up ownership.
So it's a calculated gamble in a way, right? They're leveraging debt to fuel their expansion, but there's also this pressure to perform and make sure they can actually handle those repayments.
Yeah.
This move towards debt also raises another question. If they've been operating for a while now, why haven't they sought outside funding until this point?
It makes you wonder what's changed, right?
Yeah.
Could be a few things. Maybe they've hit a point where they need a big capital injection to really scale up their operations, and debt makes more sense right now than giving up equity. Or perhaps the current investment climate just makes debt a more attractive option. It's hard to say for sure.
It's like a puzzle, trying to piece together their strategy. But speaking of attracting investors, let's talk about their ESOP expansion. They've added over 100,000 new options, bringing the total pool to a value of like $18 million. That's pretty serious commitment to their employees.
Yeah.
Absolutely. ESOPs, or employee stock ownership plans, are a really great way to incentivize and reward employees. Essentially, it gives them a piece of the pie, aligns their interests with the company's success. And that's especially important in the startup world where attracting and retaining top talent is, absolutely crucial.
So break it down for me. How does this ESOP expansion fit into City Mall's overall game plan? Is this about holding on to their current team, attracting new talent, or something else altogether?
It's probably a combination of both, really. With the competitive landscape of the e-commerce sector in India offering appealing benefits like ESOPs is a smart move,
Yeah.
It helps with retention, but it also makes them a more attractive destination for new talent.
It's a signal they're playing the long game, investing in their people as much as their infrastructure. But to really understand the potential impact of these moves, I think we need to delve a bit deeper into their business model. What makes City Mall's approach unique, and how does it stack up against the giants of the e-commerce world?
You're right, let's unpack that next. This is where things get really interesting because their model goes beyond just delivering groceries. They're tapping into something much more powerful, the social fabric of these communities.
All right, let's talk about this whole social angle that City Mall's going for. They're using these community resellers, but how does that actually work, like on the ground, day to day?
Well, it's like this. Instead of just a faceless app or website, you have a trusted individual within your community who's connected to City Mall, someone you probably already know and interact with regularly.
Right, so like a familiar face.
Yeah, exactly. This person becomes your point of contact for placing orders, receiving deliveries, and even just like getting product recommendations.
So it's almost like a modern take on the milkman or like the neighborhood grocery store, but with that added convenience of online ordering. I could see that being really appealing, especially in smaller cities where people might be, newer to online shopping and value those personal connections more.
Exactly. And that's a huge part of their strategy, overcoming those barriers to entry that often exist in these markets. People might be hesitant to trust an unknown online platform, but they're far more likely to trust someone they already know.
Right, someone who's part of their community, someone they see every day. But relying on this network of resellers has got to come with its own set of challenges, right? I mean, you're essentially adding another layer of complexity to your operations.
You're absolutely right. Managing a network of resellers, it can be tricky. You need to ensure quality control. You've got to have timely deliveries and consistent communication. You also need to make sure that those resellers are motivated and well compensated.
It's like a whole other layer of management on top of everything else they have to deal with.
Yeah, it's a big undertaking for sure.
And then, of course, there's the competition, right?
Yeah.
We know that CityMall is up against some major players in the Indian e-commerce market. So how do they hold their own?
That's the big question. To answer that, we need to look at their financial performance. In fiscal year 2024, their GMV, basically the total value of goods sold on their platform, it grew by a solid 23%. It reached about, 54 million US dollars.
Okay, that sounds pretty promising. But I noticed in one of the articles that you sent that they also reported a loss of about $21 million for the same period. Yeah. So how do we make sense of that? Is that typical for a company at their stage of growth, or is that a red flag?
That's where it gets interesting. The loss itself isn't necessarily alarming. A lot of high-growth companies, they operate at a loss in their early years. They're investing heavily in expansion, customer acquisition, all of that.
Yeah.
The key question is whether that growth is sustainable and if their model can eventually become profitable.
So it all comes down to their unit economics, right? Can they make a profit on each sale, even if they're losing money overall?
Exactly. We need to look beyond just the top-line numbers and understand their cost structure. How much does it cost them to acquire a new customer? What are their operating expenses? These are crucial factors in determining their path to profitability.
It's a reminder that growth isn't everything, right? They need to find that balance between expanding their reach and building a business that's actually sustainable and profitable in the long run.
Absolutely, yeah. It's about finding that sweet spot.
It really is a balancing act, isn't it?
Yeah.
They have to keep their eye on the big picture, but also make sure that each individual transaction is contributing to their bottom line.
Yeah, it's a delicate balance for sure. They need to make sure they're not just growing for growth's sake, but that they're laying the groundwork for long-term profitability.
And, this brings us back to their decision to go for debt financing instead of seeking another round of equity funding. It's an interesting move, considering they raised a significant amount back in 2022. So what do you make of that?
Well, the market conditions have changed quite a bit since their last equity round. Interest rates have been all over the place, and the overall investment climate might not be as favorable for equity-based fundraising.
Yeah.
Debt financing could be a way for CityMall to keep a tighter grip on their company, maintain more control, while still getting the cash they need.
So it's a way for them to call the shots, basically.
Yeah, exactly. And it shows a certain level of confidence in their business model, right? They're basically betting they can generate enough revenue to handle those loan repayments.
And that confidence probably comes from their belief in this whole social commerce approach, right? Tapping into the power of those local communities.
Absolutely. I mean, they're not just selling groceries, they're building relationships, That's a powerful thing.
It really is. So as we wrap up our deep dive into CityMall, what are your key takeaways? What stands out to you the most?
Well, for me, it's their innovative approach to e-commerce, but they're really leveraging those social connections to create a much more personalized experience, especially in markets where trust and familiarity are so important.
Yeah, they're not just another faceless e-commerce giant.
Right, they're trying to build something different.
And they're not afraid to take risks, are they? I mean, expanding their ESOP pool, going for debt financing, they're definitely making bold moves.
They are, but, with any ambitious venture, there are risks involved. The competition is fierce, and they need to figure out how to, consistently turn a profit.
It's a classic startup story in a way. A mix of innovation, ambition, and some calculated gambles. What would you say is their biggest opportunity?
I'd say it's their ability to scale this model, grow without losing that personal touch that sets them apart. If they can manage that, they could become a really major player in the Indian e-commerce market.
It's a tightrope walk for sure. Now, what about their biggest risk? What do they need to watch out for?
Well, I think the biggest risk is losing sight of what makes them unique. As they grow, there's always that temptation to just become another platform focused on, price and convenience. They need to hold on to that community-driven approach, that personal touch. That's what builds loyalty.
It's all about finding that balance, right?
Right.
growth without sacrificing their identity.
Hmm.
So for our listener who brought us this fascinating case, what's the big question they should be thinking about?
The question is, can CityMall really make this work? Can they create a sustainable and profitable business by harnessing the power of social commerce? Can they become the go-to choice for people who are looking for a more, I guess you could say, a more human approach to shopping online?
It's a fascinating question, and only time will tell how it all plays out. It's definitely a story worth following. Thanks for joining us for this deep dive into the world of City Mall. Until next time, keep exploring and keep learning.